Let's dive into the latest updates surrounding SoFi and take a closer look at some key data points. We'll analyze what recent movements indicate, examine some notable shifts, and determine whether today might actually represent a bottom for SoFi's stock. This discussion will break down the market dynamics, volume changes, and some of the broader financial factors at play. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi ended the day with an impressive 5.86% gain, closing in the green. The stock fluctuated between a low of 11.44 cents and a high of 12.12 cents, demonstrating a strong trading session. What really stands out is the trading volume, which reached 54.06 million shares, significantly above the average of 46.7 million shares. High trading volume is often a positive indicator, as it suggests heightened investor interest. A stock with declining volume typically signals waning investor enthusiasm, while a surge in volume can mean institutional money is making a move. Over the past 2 days, increased volume wasn't limited to SoFi. The entire market experienced a rise in activity, hinting that larger investors might be shifting back into equities. For a while, funds were flowing into alternative assets such as money markets and cryptocurrency, but this recent trend could signal a reallocation back to stocks. Market fear has been a dominating theme lately, primarily due to concerns about tariffs and inflation. However, today marked a shift in sentiment. It might be one of the first days in weeks where there weren't any major tariff-related statements making headlines. While steel and aluminum tariffs are set to be enforced at midnight, the lack of additional surprises means the market has already priced in the impact. When markets anticipate news and no unexpected developments occur, we often see a sense of relief, and that's what appears to be happening here. Inflation worries have also been looming, but today's Consumer Price Index (CPI) report provided some relief. The data came in slightly below expectations, both on a monthly and yearly basis. This is crucial because it suggests inflation may finally be trending downward. The previous 4 CPI reports all indicated rising inflation, so this break in the pattern is encouraging. Had inflation come in higher than expected, the market could have reacted negatively, potentially dropping 10% or more. Conversely, an excessively low number might have sparked concerns about weak consumer spending. Instead, today's data landed in a sweet spot low enough to suggest inflationary pressures are easing, but not so low as to indicate economic stagnation. This has eased some of the market's fears, leading investors to ask, could this be the bottom? While the short-term outlook appears more optimistic, one factor that previously contributed to SoFi's decline was the rising 10-year Treasury yield. Typically, this yield moves inversely to stocks, and an increase can signal concerns about economic stagnation or stagflation. While some speculate about such risks, it's still too early to draw firm conclusions. Investors will be watching future economic data closely to determine the next move. For SoFi specifically, there weren't any major company-specific updates today. However, after market close, several Form 4 filings revealed that multiple executives, including Derek White, Aaron Pinto, Christopher Lapointe, Stephen Simcock, Anthony Noto, and Kelly Keller, received stock awards. These awards were previously approved by shareholders and are locked in for 4 years, so there's nothing groundbreaking in this news. It's simply a standard part of executive compensation. On the short-selling front, there was a notable return of short positions across many heavily traded stocks. The CPI report may have disrupted short seller strategies, as 12.9% of SoFi's free float remains shorted, amounting to approximately 130.33 million shares. Interestingly, the cost to borrow these shares declined slightly by 0.2%, indicating that some brokerages lowered their borrowing fees. While this could be seen as a mild form of market manipulation, it hasn't yet triggered an increase in short selling. Today marked the second consecutive day of shorts returning shares, with 615,000 shares being covered following yesterday's 1.01 million. In the options market, $12 million was spent on call options compared to $7.87 million on put options. About 51% of today's options activity was bullish, suggesting investor confidence in the stock's upward momentum. However, instead of options being the primary vehicle for investment, many traders opted to purchase SoFi stock directly, which is a somewhat unusual pattern. A notable transaction involved $2.6 million in premiums between $8.35 and $8.40, with activity centered around strike prices in the $11.50 to $12 range. Some of these trades were multi-leg transactions, including both calls and puts. For instance, an $11.50 put option expiring on March 21, 2025, was purchased for $928,000, a bearish bet. Despite this, most options trades were bullish, with price targets ranging between $12.50 and $13. Meanwhile, bearish traders are expecting a drop below $10.50. One perplexing aspect of the market today is the presence of bearish bets despite favorable data. With positive economic indicators and a reversal of inflation trends, it's unclear why some traders are betting against SoFi's stock. However, contrarian investing can be profitable if the broader market consensus is wrong, which may explain some of these positions. Large transactions in the secondary market exceeded $100,000, with sums reaching as high as $32.8 million. The dark pool, often utilized by institutional investors and short sellers, also saw notable activity, including transactions of $2.4 million and $1.7 million. Dark pool trades often lack transparency, making them a potential tool for market manipulation. Interestingly, Cathie Wood's recent sale of SoFi shares has turned into a bullish signal. Her trades have developed a reputation similar to those of Jim Cramer, often serving as contrarian indicators. SoFi closed the day at $11.92, still trading within a key support range. The S2 and S3 levels around $11.31 are expected to provide strong support. Tomorrow's Producer Price Index PPI data will be another factor to watch, though even a negative surprise is unlikely to push SoFi significantly below this range. Meanwhile, resistance at $12.72 remains a key level to monitor. If bullish momentum continues, breaking through this level could set the stage for further gains. Technically, today's recovery pushed SoFi above its 200-day moving average of $10.84, signaling potential strength. Many stocks have been heavily discounted due to tariff concerns and broader economic uncertainty, but the market appears to be reassessing those fears. The consensus seems to be that recent declines were exaggerated and a correction is underway. Looking ahead, key resistance levels to monitor are $13.59, $15, and $16.41. If SoFi maintains upward momentum, these could become targets in the near term. Oversold conditions could also provide an additional catalyst for a continued rally. So the key question remains: has SoFi truly reached a bottom? Are we poised for further upside, or could there be another dip ahead? Based on current trends, SoFi is likely to trade in the $13 to $17 range for the foreseeable future. In the past, SoFi remained in a tight trading range between $6 and $8 before occasionally breaking out toward $10. Similar patterns suggest this could be another temporary breakout before settling back into the $13 range. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.